Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within corporate filings. Today we've got a really interesting one from Carnival Corporation and Carnival PLC that could spell big changes for shareholders and travelers alike. Before we dive in, if you love getting clear and actionable insights from these dense SEC documents, make sure you are subscribed. And we have a thriving Discord community linked in the description below where we break down these filings even further. Alright, so we're looking at a Form 8K filing. Think of this as a special announcement from a company about really important stuff that isn't on a regular schedule. Today's filing centers around an amendment to a key agreement called the Amended and Restated Deposit Agreement. This might sound a bit dry, but what it signals is pretty massive. Basically, Carnival PLC, which is the UK-based entity, is making changes to how its American depositary receipts, or ADRs, work. These ADRs represent shares in the company that are traded on US exchanges like the New York Stock Exchange. The big news is the amendment to the termination provisions of this deposit agreement. It lays out exactly when this whole arrangement can end, and it is tied to some pretty significant upcoming business changes for Carnival. One of the main triggers for the deposit agreement to end is the proposed unification of Carnival Corporation and Carnival PLC's dual listed company arrangement. This is a huge deal. Imagine two separate but related companies operating together merging into one. They also plan to migrate Carnival Corporation from Panama to Bermuda. This is essentially a corporate restructuring aimed at simplifying their structure and potentially optimizing their tax situation. So what happens if this unification goes through? The agreement states that the depositary, which is JP Morgan Chase Bank in this case, will try its best to give holders of the ADRs the new common shares of the unified Carnival Corporation. If for some reason they can't distribute the new shares, they might have to sell off whatever is left and give the money back to the shareholders. This is crucial because it means ADR holders will eventually receive shares of the new consolidated entity. The agreement also outlines other termination scenarios, including if they redeem all of the company's shares or if the ADRs get delisted from the New York Stock Exchange. These are standard clauses, but they reinforce the idea that this depositary arrangement is being adjusted to align with fundamental changes in the company's structure and trading of its securities. Looking at the securities registered here, we see Carnival ordinary shares represented by American depositary receipts traded under the symbol CUC. Also, their very senior notes due in 2029 are listed. The fact that they are amending the deposit agreement for these ADRs means that the way US investors hold their stake in Carnival is set for a pretty significant shift. This unification could really streamline operations and make things clearer for investors. While this filing doesn't contain detailed financial tables like a quarterly earnings report, it gives us a window into a major strategic move. The company is essentially preparing the ground for a significant structural change. Imagine a company that was previously like two distinct branches of a tree deciding to merge into one single strong trunk. The implications here for investors are that their ADRs will likely convert into shares of this new unified Bermuda domiciled Carnival entity. This move away from the dual listed structure could simplify reporting and potentially make the company more attractive to a broader range of investors by streamlining its corporate governance and legal domicile. It also signals a vote of confidence from the management in the upcoming unification. Now let's think about the bigger picture. Carnival is in the business of making people happy by taking them on cruises. However, the cruise industry is highly competitive and susceptible to global events like economic downturns or health crises. This restructuring could be a way for them to become more agile and efficient in navigating these challenges. By unifying operations and potentially centralizing in a more favorable jurisdiction like Bermuda, they might be able to cut costs and respond more effectively to market shifts. It's interesting to tie this back to a Warren Buffett-style analysis. He often looks for companies with a clear long-term strategy and a management team that acts in the best interest of shareholders. This restructuring seems to fit that bill. It's a significant, if complex, move that appears designed to strengthen the company's foundation for future growth and stability. The risks are always there with major corporate actions like this. There could be integration challenges or unexpected regulatory hurdles. But the intent seems to be a move towards greater efficiency and a more simplified investor experience. So to wrap up, this filing is all about paving the way for a major corporate transformation. Carnival PLC's deposit agreement is being updated to reflect the anticipated unification of Carnival Corporation and Carnival PLC into a single entity possibly domiciled in Bermuda. This is a big step that will likely see ADR holders transition to owning shares in this new unified company. Looking at the overall direction, Carnival is clearly signaling a commitment to streamlining its operations and simplifying its corporate structure. This could lead to a more efficient company better positioned to compete and grow in the dynamic travel industry. The main risk is always in the execution of such a large merger and the potential for unforeseen obstacles. However, the opportunity lies in creating a more powerful and cohesive global brand. This significant restructuring shows that Carnival is not sitting still and is actively working to optimize its business for the future. Alright, that's our breakdown of this crucial Carnival filing. What are your thoughts on this upcoming unification and what it means for Carnival and its investors? Let us know in the comments below. If you found this breakdown helpful, hit that like button and subscribe for more deep dives into corporate America. And don't forget to join our Discord community for even more in-depth discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.